So good afternoon, everyone. Nick Friedman here. Thanks for making some time today. Just a quick note, we're going to be recording today's session and sharing it with attendees afterwards. So I'd like to thank everyone for making time today. And, before we kick off, I want to do just, quick overview of intros and the wonderful speakers we have on today's exciting event. So I'm your host today, Nicholas Friedman. I'm our founder and managing partner at Templar Shield. I've been in the enterprise risk management space for a little over a couple of decades and really excited about where the technology is taking a lot of our customers, a lot of our clients in our industry. So today we've got speakers from ServiceNow, we've got Alan Paris, and we've also got Gabe and Rosa from Blockspaces who are going to talk to us about how Blockspaces is approaching the Web 2, Web 3 integrated data model and how blockchain technologies are being employed today. A lot of us think cryptocurrencies, but there's also several other use cases that we're going to be walking through here. So before we hand it over to the Blockspaces team, Alan, if you want to jump in briefly and just do a quick intro on as our co-moderator here and some of the questions that you're going to be asking, I think are very relevant to our audience. And then we'll hand it over to Rosa and Gabe and have Blockspaces kick it off. So Alan?
Sure. Yeah, thank you very much. Appreciate it, Nicholas. Hi, I'm Alan Paris, and I'm the Global Head Architect for Risk and Compliance in Financial Services at ServiceNow. I have a background both in management consulting and line management within the financial services space. Over to you, Rosa and Gabe.
Thanks so much. Gabe, maybe we can do the other slide. Not that I expect anybody to do a big dissertation on our bios, but I'm Rosa Shores. I'm the CEO and co-founder of Blockspaces. Been in the blockchain space. This says 9 years, but it's actually almost 10 now, 2012. And we've been involved in a lot of things throughout the last decade, including I am a mentor at the University of Arkansas Blockchain Center of Excellence, as well on the blockchain task force for the National Produce Marketing Association, and also on the innovation task force for the Florida Department of Agriculture, which looks at how we can utilize all kinds of innovative technology for food safety. So, Gabe?
Yes, and hi, I'm Gabe. I'm the other co-founder and chief blockchain officer for Blockspaces. And my background is in computer engineering, and I'm author and speaker and mentor with many businesses that operate with this technology.
Thanks, you guys. And so kind of agenda today, we're going to talk to, Web 1, Web 2, Web 3, what it is and what people are talking about today in the market. And Rosa and Gabe are going to walk us through Blockspace's approach to the market here. And Alan's going to be jumping in with a lot of questions that you guys have provided and a lot of feedback that we've heard from the market of what they want to hear about how Blockspaces is helping a variety of industries, not only financial services, deal with, the Web 3 tech stack as we start migrating and integrating Web 2 and Web 3. So Rosa, hand it over to you.
Yeah, so, I guess a little bit of an overview of what Blockspaces does. We are a platform that allows what we call Web 2 developers or enterprise developers to easily integrate Web 3 technologies up into their legacy applications or their Web 2 applications. As we watch this space emerge over the last decade, we just were involved in a lot of custom development and consulting, and we were watching a lot of integrated, kind of vertically integrated solutions emerge in the market. Or there's sort of this mindset that this kind of transition between Web 1, Web 2, Web 3, as though that's going to happen in a way that the light gets turned off on Web 2 and all of a sudden everybody's in a Web 3 world. And we just believe very strongly that is not going to happen that way. That businesses are built around, their business processes are built around these kind of Web 2 technologies. And that we believe that it's going to be an environment where those technologies need to be integrated with and live alongside of or integrated with Web 3. And what does that mean? It just means if you think about the first version of the internet, so to speak, it was very centrally located, mainly around kind of government. And then when we saw the emergence of Web 2, which is when we're thinking about Facebook and what we see the internet as of today, that became much more distributed, but it was still centralized around big tech. In a Web 3 world, or the notion of a Web 3 world, these are not just distributed, but they're decentralized systems that allow for much more, not only distribution, but the power of the data lies with the user rather than a centralized entity. So this is a whole new concept of how we interact with each other, how we transfer data and value across the internet. And again, we believe that this is going to be a time period for many, many years where there's these Web2 legacy technologies, as we call it, living alongside of or integrating Web3. And so our platform allows for those developers that are sitting inside of an enterprise to deploy those solutions and then pull them up into their legacy applications rather than focusing on just a Web3 application. So that very high level, we're going to get into what blockchain is and why that matters and why it's important. But at a very high level, that's where BlockSpaces lives, in this world between Web2 and Web3.
Thank you for that explanation. I was actually going to ask you, like, what is Web2 and Web3 beyond the marketing hype? So speaking of what you do in Web3 and integrating applications, enabling applications to be integrated from Web2, what problems are you solving, in terms of both industry and more specifically to financial services?
Yeah, and again, BlockSpaces is a developer tool that's industry agnostic. And so not only do we see the opportunity for these developers, when you think about, and again, we'll talk a little bit about what blockchain is and why that's even important in this kind of environment. But we've seen, even within one business process, let's just take supply chain, for example. And again, once we get into what blockchain is and the importance of the technological innovation that it is, you'll understand why this makes more sense. But when you think about even within a supply chain process, if an enterprise is looking to potentially deploy a solution that allows for not only a track and trace mechanism of what is happening or following logistics or counterfeiting products, following the provenance of items across the supply chain, but they also might be interested, and usually are, in solving cross-border payments and supply chain finance, and that's all within one business process. And so we see that not only are there individual use cases, but there's use cases within sometimes a single business process within a business that requires different types of blockchains, which again, we'll talk about a little bit later.
Please continue, go for it.
Okay. All right. So, and Gabe, chime in here anytime. Gabe, my co-founder, taught people about this technology for many years, probably thousands of people in the last decade. So please chime in, Gabe. You're extremely good at this. So let's talk a little bit. Let's talk about a little bit about what actually this is. Like, everybody talks about blockchain, and what is the big deal here? Blockchain is a technological innovation that at the very highest level solved two really long-standing computer science problems that existed when we were talking about digital information. One of those was this concept of double spend. And by the way, we can't really talk about like the invention and the innovation of blockchain without talking about Bitcoin. That's just, regardless of how you feel about it and regardless of the headlines that you feel about it, that is where it started. And it solved these two very long-standing computer science problems. First of all, like I said, the double spend problem was that. Well, that means that if I take a picture of myself and send it to you in an email or over chat, you can take a copy of that picture and send it to someone else. On and on and on. There's no way to ensure that thing that I sent you cannot be copied and replicated and sent to someone else. The other thing is that this notion of what's called the Byzantine generals problem, which is how do I, if I have a group of actors that I need to trust in order to make a decision, but I don't necessarily trust those actors, but I have to in order to make decisions. How can I trust that the information that they're conveying to me is truthful? And so these two very important computer science problems, like I said, were problems that came about because of the digital world that we're living in. Bitcoin solved both of these problems in a very unique way. And so, Gabe, you want to go ahead to the next slide? Okay, and so what we see with that is this sort of convergence of the digital and physical world, where we have what's considered fungible assets that are physical assets like money or gold or coins. And then we have non-fungible physical assets that are like your home or a piece of art or a diamond. In the digital world, those things can now exist because of this innovation. So you can now, for the first time ever, have actually fungible digital assets, and you can have non-fungible digital assets. So you can actually prove that a piece of digital information is not copied and that it is the single source of truth without having to have like an actual physical product. So if you think about, I can prove that this is the Mona Lisa because I actually am touching it and here it is. You can now actually do this in a digital world through this unique innovation. Is there anything you want to add there, Gabe? I want to make sure that I'm covering all of it.
No, you said that perfectly.
Okay.
Yeah,
right.
I think a lot of people miss this key aspect of this technology is like we've always dismissed digital items as being quote unquote real because of the computer science problem. But now that that's solved, now we've moved past that as like a legitimate source of information, right? It's truthful because now we can mathematically prove that that is what it claims to be. And we'll get more into the nuances of how all of this computer science stuff actually works.
Any questions, Alan? I don't want to talk over any.
No, not. Please continue.
Okay. All right, Gabe, next slide. Okay, so blockchain. So we talked a little bit about why it's important. And so what is it? Blockchain is actually, while this combination of technologies solved a really unique problem that has existed for a long time, there had been threads of trying to solve this problem since the history of the internet, or the history of computer science, so to speak, and the history of having digital information. And so what blockchain, the invention of blockchain in its form of Bitcoin, what it took was four long-standing kind of technologies and just combined them in a really unique way. So these are well-proven technologies that had been utilized for all kinds of data transfers in a digital environment, but it was uniquely combined with the invention of Bitcoin. And those four things are this notion of distributed ledgers, which we'll talk about in a little bit, public key cryptography, we'll also talk about in a little bit, this notion of consensus algorithms, and then cryptographic hashing. Again, that sounds like a lot of cryptographic computer science, and it is. And so that, I think, is one of the most important things that if you take away anything from this today, please take away that blockchain, crypto, tokens, all of these things that you hear in the news are actually not a way to like retire to Belize in your Lambo. They are actually a technological innovation that allows us to move digital information in a way that we've never been able to do before. And so that is why there's so much research and innovation and happening even within businesses. How can we utilize this new technological innovation to have a new way of transferring ownership of digital information? That's what it really kind of all boils down to, and why it's so important.
So that's a really important point, I think, Rosa. And so I think a lot of that message gets drowned out by all the hype around, Bitcoin and cryptocurrency. But what are the other use cases that, affect us in our practical lives or in business?
Sure. You can, there are multiple, later on in the presentation, we talk about that 80 of the top Fortune 100 companies are already using Web3 and blockchain solutions in some way. Again, this is everything from track and trace. If you think about, I can now prove digital ownership in a way that I've never been able to use before. You think about some of the consequences for not only track and trace, for digital ID, for being able to transfer real estate tracking mortgage information or deed information, anything that you think about that required a piece of paper to move hands and transfer hands, we can now seamlessly do that in a way that proves ownership. Now people say, well, I could do that on a database. True, but do you trust the technology of the database? The information that's in a database, even in a shared database, you cannot absolutely prove with 100% that it has not been manipulated or has not been changed. When you input information on the blockchain, you can technically change that information, but you will never be able to destroy the history of it. So it allows for this immutable source of information, which has significant consequences.
Thank you for that.
Yeah, sure. And we do give some very specific use cases at the end of the presentation. They just might make more sense once people wrap their head about why would that even be used. I think sometimes, we've been doing this for so long, and we always love to watch the light bulbs go off when people are like, okay, I really get it. And sometimes you hear use cases and you think, well, I could just do that with this kind of technology or that kind of technology. Or why is that even a problem? And I think that sometimes when you understand a little bit about why this is so important and what it really means, those use cases, all of a sudden you're like, oh, that makes so much sense. I can totally understand why any business or any person would find that an impactful benefit to society. Okay, so so again, this is a little bit back up to like what we talked about, from Web 1 to Web 3. And this is this kind of transition from centralized systems to decentralized systems to distributed systems. And by its just very nature, we're very used to centralized systems. We're very used to all points going back to one data source, all points going back to one point of control. Decentralized systems kind of fracture that out a little bit and allow multiple actors to contribute to the same kind of ecosystem. That's kind of more of a distributed system. Decentralized system, but with a distributed system, you could potentially still have within each one of those little points a centralized system. Decentralized means that there really is no point of failure, and not only is it distributed, it is fully decentralized. Decentralization is hard. It's an extremely, extremely big mouthful to say something is truly decentralized. We don't see that very often. I think there's not very many examples of that. Honestly, probably Bitcoin, the Bitcoin protocol is the best example of something that we would say in this world is what we call fully decentralized. Most business use cases are these distributed systems, distributed ledgers is what they're called kind of in the business world. So very impactful as well.
And it's also worthy to note that they're fault tolerant as far as security measures go. With a distributed system, if part of the network that's interconnected with each other fails or goes offline or something happens to them with some kind of disruption, the whole system doesn't come crumbling down. It's still operational and functional. Whereas with more centralized systems, obviously there's a central points of failure that could collapse the whole thing.
Right, which don't exist in the distributed model, right?
Right.
Distributed, well, they exist better than they do in a completely centralized, but sure, yeah, I mean, the most fault tolerant obviously is fully decentralized. And I mean, here's another great example, right? I mean, this is what we're used to, a very kind of server-based environment where, if Equifax gets hacked, like, it gets hacked. With a decentralized, whether or not, in a full kind of Web3 promised world, the data actually lies with the user. And so there isn't any company in control. You're in control of your own data. We're quite a ways from that actually happening, but that's the full promise of this sort of Web3. Some even talk about Web 5 already, that where users actually are controlling their data, that there's no company, there's no centralized source. It all lies within the user's control. They control their own data, their own finances, and we're not reliant on centralized entities in any way. So that's the full promise of that world. Now, yeah, go ahead. Alan, you look like you're going to say something.
No, I'm not. Go ahead. We go ahead with the description of the algorithms and keep moving.
Sure. Yep. So this is just a little bit of touching on. This is going a little bit in the weeds. The next couple of slides just talk about a little bit more in depth about what those four technologies are that are combined to create a blockchain system. Consensus algorithms are simply a way that how do we verify this data? How do we take a group of people, a group of actors, a group of businesses that need to verify transactions on a blockchain? Because that's in essence what the participants of a blockchain network are doing. They're verifying the transactions. How do we come to consensus? And then how do we incentivize those transactions? So this is a very important part of what needs to be thought about within a blockchain system or a blockchain. And again, we can certainly dive into the weeds with anybody who wants to, maybe not on this call, but it's important to remember that a token, whether it's cryptocurrency or a token or whatever, is simply the reward. It's the incentive mechanism for the participants that are participating in validating transactions. That's all it is. So it is, again, it's not like necessarily something where you win the lottery. It's simply a way to incentivize people to confirm transactions on a blockchain network. Okay. Move on. Again, public key cryptography. This just means that within a blockchain system, this is a big part of that technology that's been combined for a blockchain, in which you have a public key that can be exposed to the world and a private key that's just yours. Think about this as having your own kind of lockbox. And a public key is something that that people can use in order to put information in, but they have to have, you control the information with the private key, which is when you take information out. So very simply, that's one of a very large foundation of blockchain.
Yeah, and these are mathematically linked, so there's no way to through a one-way function, which we'll talk about next. But so you can have a private key, but you can't go. You could derive public keys from your private key, but you can't go the other way around. If you have a public key, it's nearly mathematically infeasible to derive what the public key is from that. So this is what helps secure these systems. This is baked into the protocol itself and how it functions.
Yeah, and one of the things that, anybody that's listening, you might be incredibly interested in all of this, the nitty gritty, or it might just feel like, wow, that's like a lot, and it is. And so some of these things that we're diving into are things that, as you use your internet, as you use your cell phone, you're not usually trying to understand like what's going on behind the covers. What happens when I type something in Google and hit search? Like what all has to happen under the covers for me to get back a result? That's not something that the everyday person is like, let me tell you what happens from a technical perspective. And so some of this stuff that we're talking about is kind of opening up the covers and showing you what's happening when there's transactions being validated, to show you that this is really technology. This isn't some sort of magical mystery thing. It really is computer science. It's technology, and it's every bit as complicated as trying to understand what's happening on the other side of that Google search. So please don't walk away going, that's too much, I don't understand it. We're just trying to show that it's a technological innovation. Again, cryptographic hashing. These are, this is a very high form of math called cryptography that's very commonly used with computer sciences. And it's just a way to say that you can put in any sort of input, run it through a cryptographic hash function or expose it to a cryptographic hash function, and it comes out with a stream of numbers that's encrypted. So this is how data is stored within a kind of a blockchain system. And this isn't like exclusive to blockchain. I mean, this is how our government secure information, and many businesses use cryptographic hashing to store data. So this isn't something. None of these things we just talked about are unique to blockchain. They're just combined in a unique way. Okay. Again, just another thing to show that you do an input with a cryptographic hash function. If you put in Gabe with a capital G, or Gabe with a small g, or Gabe with a missing E, you have a completely different output. So it is not only secure, but it verifies that exact piece of information down to the letter. It's a completely different output if that piece of information is changed at all.
And this is to easily identify any missing information or information changes through an algorithm. So you can identify any forgeries or any kind of anything that's pretending to be what it's claiming to be.
Okay, so all of that to say, so what? Okay, so it takes all of these different kinds of technologies. You basically have a group of participants that's verifying transactions. Once that block of transaction data is verified, it gets added to a chain of data, and that block of data itself gets imprinted with a cryptographic hash function that includes all of the data. So I just explained that if you even have one piece of data, like one letter off in that string of data, you get a different hash function. Well, each block of data within a blockchain itself has a unique cryptographic hash function, which then becomes part of the next block of data. So if you change anything in any next block of data, it changes the entire string of data. So this is why blockchains, in and of themselves, the way that they're architected, simply become unhackable if they're true blockchains. So when you hear about hacks that are happening, and you hear about these things that are happening, the things that are getting hacked are the centralized entities, that exchanges or a wallet, that is not the actual blockchain. What's getting hacked is the centralized entity. So want to make that really clear. The way a blockchain
what's getting hacked is essentially the container or the security software or the database where these things reside, right?
That's right.
Not the blockchain itself. It's impossible to hack the blockchain because it's a distributed, decentralized system that requires agreement by multiple servers to build out this hashing mechanism.
And each block of data, every piece of information in that block of data has a cryptographic hash, and then the block of data itself has a cryptographic hash that's part of the cryptographic hash of the next block of data. So it is one of the myths about blockchain is that it's anonymous and you can't find anybody. It's pseudo-anonymous. So that means that, sure, maybe I can hide my very personal data or my personal identifiers, rather. But I cannot hide. I can never hide that transaction took place. And it's what blockchain is.
Yes, transactions can be followed down to a very granular level.
That's correct. And so that's why we see that people that do nefarious activities on a blockchain, within a blockchain system, is very, very unwise. Gabe has consulted with the Secret Service. They have brought him in to look at criminal data. And I'm telling you, to think that you can hide what you did on a blockchain is a complete myth, because it's the exact opposite. Everyone can see it.
Yeah. Even hacks that happened several years ago, you can track any kind of transactions that happened thereafter, like forevermore. So anytime those bits are moving, you can see that. You can automate a tracking mechanism that follows the rabbit trail, and criminals are getting caught from that mechanism. The the IRS, the Secret Service, or the DOJ, they're all on top of it. They have, they're tracking this stuff very, very closely.
Okay. Next. Just quickly, there's different types of blockchains. Just as there's kind of this scope of decentralization, what we call now that's happening, we see what we call public blockchains, which are completely permissionless. Again, this is like a Bitcoin blockchain. That means anybody can participate. Anyone on this call can go download the software online and run the software and participate in the Bitcoin blockchain. You can do it right now. So that's a completely permissionless, open source, public blockchain. We have everything from that to what we call private blockchains now in the business world, where there's potentially internal businesses, internal business problems that are trying to be solved. They want to open this up to their network of, suppliers, vendors, partners, or their network of business partners, but they don't want to necessarily make this data public. And then you have hybrid solutions, which is what we think is probably what will be in the world with us for a long time, which we see use cases where they're using blockchains where part of that is open and part of that is permissioned, or perhaps they're using one type of blockchain for their financial data and one type for their track and trace or their logistics data. So there's a couple of different kinds of schools of thought about what kinds of blockchains work for what kinds of business purposes. And we firmly believe that it is going to be a multi-blockchain world. That's part of our value add as well. We don't think there's one blockchain, and we think there's plenty of blockchains already in the world. The world doesn't necessarily need another blockchain. It's just now, how do we integrate these blockchains with each other and up into legacy applications? That's where we want to sit. It's helping businesses do that. And again, many industry use cases, now that you know a little bit about some of the power of this technology, perhaps you can imagine within your own business, like how something that would allow that kind of visibility into what is happening within your business. It allows you to have almost what we call like a real-time business. You're getting real-time data. And these are just some of the use cases that we're seeing emerge within the business world. Some of them are fantastic. There's been proof of concepts that were great that couldn't go into production. This technology is not 100% mature. We have a long way to go, but there's some really interesting and amazing use cases that are already in production. Okay. Again, just to tag on to that, about 77% of the top 100 public companies are already using Web3 and blockchain, obviously seeing billions in efficiencies gained and even new revenue streams with some of this technology that's emerging. There's a great website called Ledger Insights that focuses on nothing but business use cases around blockchain. And there's news every day about another company that is deploying this technology. So it's definitely not going anywhere.
Yeah, and it's also important to note that these are the top 100 public companies in the US. This is a global phenomenon. This is happening all around the world simultaneously, from government organizations, nonprofits, NGOs, to consortium organizations, and even to central banks and, of course, private enterprises. So this is definitely not going anywhere, and it's actually gaining steam, if anything.
So having said that, and having seen the use cases on the previous slide, and the fact that adoption is widely being undertaken across corporations, both public and private, what pain points are you seeing at your customers that they're leveraging blockchain and crypto technology to solve? And here we go. How blockchain is in business.
Yeah. So, and Gabe, you can maybe give a little bit of high level on this, but blockchain is not, amazing as blockchain is, it's not for everything in every use case. It's not like magic fairy dust that you have a problem, let's sprinkle blockchain on it and everything is solved. It requires a completely different mindset of how you're going to run your business and how you're going to really share data with your business partners. Blockchain at the end of the day is a new way of doing business as much as it is a new technology. And so understanding of how to leverage those participants within your blockchain network is critical to the success. So Gabe, you want to give that a little?
Yeah, well, so like Rosa mentioned, and it's not just how you're going to operate your business. It's a tool, right? So you have to use the right tool for the right situation and use case application. So as Rosa said, this definitely isn't something that can be applied to everything everywhere. There's very specific things that you want to key in on as far as your business problems go that you would. Where you would even apply this if it kind of meets these criteria, if you will. So this kind of walks you through, what are these specific things that you have to ask, right? You can think of it like a flow chart, right? Is that if it checks all these boxes, then consider using this technology, but if not, then it's probably not a good fit. So you want to be very specific and purposeful on where this is being applied, or else you're not going to get the value out of it.
Right. There has to be an analysis and a return on investment calculation up front. But when you talk about greater contract and payment security, for instance, I've seen use cases around things like trade finance and letters of credit, where there's a lot of inefficiencies in that system that can be resolved and certainly made more efficient and streamlined through the use of blockchain in smart contracts and payment security, because of inherent risk that exists in letters of credit.
Absolutely.
100%. And this is, I would say some of the problems that we're seeing is, first of all, some of these industries that can probably most benefit from this technology are not inherently digitized at all. Maersk had a very large and very successful for its time and for what it was, blockchain consortium where it had all of, and it was, headed by.
We're talking about Maersk. Yep.
Yes. I mean, I think they just pulled it, but that was mainly because it was very difficult to get participation, because I think the number was 1.2% of shipping worldwide. These shipping logistics is digitized. I mean, we're literally using like paper manifests. I mean, that seems crazy to us today, but like that really is true. And we've seen that time and time again, is that, we're talking about, are you ready for Web3? They're not even on Web 1. I mean, they're still writing paper manifests. And so, how do we take that kind of business and that's not across the board, but there's so many inefficiencies just cost because information is not even digitized. So that is, we feel that that's one of the reasons why it's so important to kind of meet people where they are with all of this, and the expectation when you launch a blockchain network that you need to have all of your suppliers, vendors, and partners a part of to make it actually truly successful. And they don't have the technology, even resources to like integrate a blockchain, much less ingest that data and pull it back into whatever legacy system they're using. You can start to see how it becomes difficult for people to participate. I kind of liken where we are today, or I think we're making a lot of strides in this area, is blockchain and blockchain applications have sort of been like these really bright light bulbs, or these light bulbs, so to speak, with no power grid, because there's not tools, there's not infrastructure. There's a fantastic documentary called General Magic that's about the advent of the cell phone that was long before it was ready to like actually be live. And it's literally like, if you watch this movie, they've like drawn out the smartphone, but there was no infrastructure for the smartphone, so it failed. I think we're past that with blockchain, but there needs to be tools like what Blockspaces is doing, and infrastructure tools that allow everyone to participate in these blockchain networks. Otherwise, it's just a light bulb with no power grid.
Well, if looking at the time's about 15 minutes left, maybe you want to talk a bit about how you're using this, how Blockspaces is using this to solve business problems and some things that you're currently engaged in.
Sure. So that is, like I said, that's literally where we live. Gabe and I did a lot of custom development and consulting for businesses in the 2017, 2018 kind of area. And so we would go into companies and talk to them about their solutions and potentially do proof of concepts with them, singular proof of concepts. And there was always this kind of notion of, I don't have blockchain talent or blockchain resources, which are very difficult to find. Blockchain engineers are extremely difficult to find. I don't have those kind of resources on the bench, so I have to outsource this kind of work. When honestly, when I'm a director of IT or I'm a director of innovation, what I really want is for my developers, regardless of their experience or expertise with blockchain, to be able to build proprietary solutions that are specific to my business and my specific business problem, integrate them up into my legacy applications, and have those being able to be flexible for my IT team to be able to work with these technologies rather than calling in a standalone company or third-party vendor for a proof of concept that they then say, okay, here's your proof of concept, okay, bye now. And that's just not the way blockchain works. You have to be able to not only be able to onboard easily your group of business partners, but you have to be able to be flexible and continue to innovate and integrate these technologies. So again, we're seeing businesses that are not only interested in integrating for one specific use case, or if you think about there's applications now that are like, I have an application that's built on blockchain that solves my supply chain problem. It's a very kind of vertically integrated blockchain solution. Okay, but if the rest of your network can't also integrate that solution, or you want to have flexibility about that solution, or you want to integrate multiple blockchains, blockchain is best for disparate systems, and what you're doing when you do that is you're actually integrating a still siloed solution, except now it's on blockchain, which is, you could say is arguably worse. So it's important for our customers. Our customers are looking for ways that they can integrate multiple use cases of these technologies. We are for what we call kind of like our premier, just for an example of what we talk about, like Web 2 to Web 3, is that, we have lots of customers that were asking us for a payment solution, most specifically around DeFi. And so we have launched a solution that allows for the ease of integration from what's called the Lightning Network that allows for digital payments up into QuickBooks. And so it becomes just as simple as, I want to accept this kind of payment. I hit this button, it's now easily integrated up into QuickBooks. This is the implicit.
When you say DeFi, you're meaning decentralized finance, right?
That's right. Yes, sorry. Decentralized finance. That's correct. Gabe, do you want to run through some of these use case, maybe very specifically use cases?
Sure.
Now? Hopefully the audience has a little bit more overview. These use cases might make a lot more sense.
Yeah, well, to what you were just talking about, payments is the obvious first obvious use case that this technology has been applied to. That's what's getting all the hubbub and hype. And so you have Deloitte putting out a survey last year in collaboration with PayPal, seeing that 85% anticipate digital currencies to be pretty much ubiquitous over the next several years. So there's also these things called stable coins. So instead of like a digital asset that's not really tied to any kind of national currency, you'd have digital assets that are basically pegged to a dollar or a euro or a yen. So this is being rolled out specifically by central banks all across the world now. We've been tracking that for a few years, and this has become a very palpable trend that we have seen. So even nation states are seeing the benefit of utilizing this kind of technology on a national currency level. And then specifically with banks, international banks, doing international transactions, cross-border payments. If you have obviously tried to transact through SWIFT or some kind of other international banking settlement system, it could be very cumbersome. It could take a while, and the transaction costs are sometimes quite high. So what this technology enables is that you can basically make payments instantaneously, or transactions of any kind. It doesn't have to be payments necessarily, but in this particular case with Wells Fargo and HSBC, they're doing cross-border payment settlements and interbanking settlements, banking institutions. We've also seen this with JP Morgan, I think, was actually the first one to do that internally with their own system. So they're able to reconcile things much faster. And then DTCC recently announced that they are looking into developing a whole blockchain system around their digitizing their securities and security asset management platform to streamline, again, the settlements and transference of any kind of securities. So right now, it's actually pretty difficult to understand who actually owns the security itself when it's being transferred, and that's why you have big organizations like DTCC that are kind of like that central point of reconciling who owns what at what given time. So they're wanting to streamline with a blockchain. You can really have a nuanced system that can really keep track of these things in a much more nuanced and way, where the settlements of the transactions themselves are happening in real time. And you can prove it, right? Like we mentioned before. And then CoreVest is they announced a similar kind of thing, securitizing single-family resident or rental loans. So the loans themselves become this kind of digitized payment mechanism, because you can build, and we haven't really talked about this, but the notion of smart contracts, which is a form of basically it's like a program that's embedded into a blockchain that functions within itself, given the whatever the parameters you set within it. So it can autonomously operate and transact. And so you have these things where you can, when you hear the term DeFi, this is what's happening, is that you're not operating with a central entity or organization. You're actually operating with a protocol. So these things are all autonomous and automated. And through the mechanism of blockchain, you can do that in a trustless environment. You don't have to rely on a third party. Of course, many people still do, and that's where we see the convergence of these two worlds really not going anywhere. It's just gonna take a new form, a new shape. And then asset management is obviously going to be a really big deal. When you hear about tokenization or tokenizing assets, this is happening not only with purely digital assets, but also with physical assets. And like we just talked about, securities. So your company's stock profile will eventually be tokenized on a blockchain and transacted with these asset managers in a digitized environment that's, again, can be fully autonomized with the smart contract functionality. So these are kind of like really high level concepts that we can dig into if there's any more questions about that in particular. But this is just a glimpse of some of the things that are happening right now. The idea that we're, I guess, trying to convey is this isn't something that we're talking about in the far off future. This is literally happening already on a large scale with these bigger institutions. So hope that's
we do have some
clear.
questions, Gabe and Rosa. This is from one of our participants a few minutes ago. The level of decentralization in a blockchain network, as I understand, is key to ensuring the security of that network. So the level of decentralization in a blockchain network is key to ensuring the security of that network. With many blockchain networks being created, which may be fully permissioned, how do end users or organizations that want to leverage these blockchains understand the level of security, decentralization of these networks?
Excellent question. So with a more permissioned environment, obviously somebody's doing the permissioning. So you're operating with other people on that same network that you know, right? That's the point of a permissioned system. So the security threshold, I guess you would say, is much lower, or the threat model is much lower because you know all the participants on that network. So it's not necessary to have such stringent security measures as you would with a completely permissionless open network. Where you need those mechanisms that are require, say, lots of energy or lots of focus on that security model itself. It's built in, but it's correct to say that it depends on how decentralized the system is to track its security.
Yeah, and an example of what Gabe means by that way, these people and you trust them. That doesn't mean that, I don't want to assume that you understand this, but that doesn't necessarily mean that hey, this is a group of my friends or very close business colleagues. There's still situations where you could be the kind of the delegator of permissions within the permission blockchain, in which you need to share information across a group of business partners. Like supply chain is a perfect example where you trust that these people are truly partners, but you don't necessarily trust their information. So, you can have a group of participants in which you want to grant them permission, but that doesn't necessarily mean they're highly trusted. You need to verify their data, and you need to have a ledger in which you guys are all looking at the same data. Your business partners are all looking at the same data and verifying the same data. And so they are allowed permission to see that, but it doesn't necessarily mean you trust them. This is like the perfect Byzantine generals problem, right? With a public blockchain network, there's literally none of that. Like any of us can go participate in a public blockchain network.
Thank you. That's very helpful. We have another question. How does a Web3 transformation impact existing core banking platforms? So how does Web3 transformation impact existing core banking platforms which may not even be, Web 0, they may be
Sure.
systems, right? And they may be mainframes.
Yeah. Well, so there's a couple of thoughts there, right? There's with these new capabilities, functionalities, what I mentioned before, as far as what DeFi is, smart contracts. Now we see systems that are combining these new models and new methods to mimic financial services, but without a corporate entity involved in the middle. You're dealing with a protocol instead. So a piece of program that's just living on a blockchain somewhere. So and we're able to see how you can replicate just simple transacting or swapping of different assets, right? From an exchange perspective. And these are called decentralized exchanges or DEXs, where any user can log on and start transacting and trading and swapping different assets for each other. And the mechanism involved in the middle is not a traditional order book. It's using a mechanism called automated market making, which is pooling liquidity of different assets and programmatically figuring out the bids and asks, and then matching them up algorithm through an algorithm instead of through a traditional order book. So very unique mechanisms that could be very disruptive as well. Also, you have the same kind of a situation with lending and borrowing, where somebody can, instead of going to an institution, you're going to a protocol and borrowing from somebody else on the open market. Of course, and they set their own rates, they set their own collateral arrangements as well. And this is, of course, where you can get into a lot of trouble if you're not careful. But some of these, the mechanism itself is already operational. It's already built, and these things are happening right now, where you can borrow against these digital assets in a completely trustless environment.
Well, thank you for that. Nick, you want to wrap things up for us?
Yeah, I really appreciate all of your guys' time today. Again, this is the first series we're going to have. We're going to be posting this and sharing this link for the recording, and with the poll around asking participants and registrants around what other questions do you guys have. A lot of the things that we were hearing are, we'd like to understand after this around how's Blockspaces helping integrate, and I think Rosa and Gabe, you guys have some really cool products coming out around integration of some traditional Web2 banking platforms into some of the Web3 tech. So we're really looking forward to hearing about that. And we can also send a link to the Blockspaces website regarding your products. So really appreciate everyone's time here. Looking forward to the next series, which will kick off probably mid or end of Q1. Once we get some feedback from the customers, the registrants, and participants around what they're looking to hear on the next series. So thanks again, everyone, for the time. Really appreciate it today. A lot of information to digest here, and I'm sure myself and a lot of other people will be doing some homework and some research to kind of get up to speed with Gabe and Rosa.
Thank you.
Great.
Thanks for having us.
You're welcome. Thanks for the time. Have a great rest of your day, and we'll talk soon.
Thank you.
Take care.